Some of the other aspects which are worth noticing are as under. Is the evidence required for payment of tax to claim foreign tax credit? The answer is yes, because when you are claiming a credit, there has to be some evidence that you've actually paid taxes in the other country. So it could be either a TDS certificate or some other original document which should be obtained before a credit can be claimed. What if the taxation is under a different head of income in the source state and different head of income under the state of residence? That is immaterial for the purpose of claiming a credit. What is material is whether taxes have been withheld, paid, and a proof of that is available. Should the credit be considered for advance tax? Of course. Otherwise, what is going to happen is you're going to pay taxes twice. For net of tax contract, can the credit be claimed? Now, what happens in these cases is, suppose an Indian company has to get $100 from a US company. On this $100, the tax in US is $20, right? The Indian company says, I need a cash of $100. Whatever taxes are there over and above, whether it requires grossing or otherwise, you bear this tax, right? So in such a case, the taxes are still paid on behalf of the non-resident recipient, and therefore, even in such cases also, the credit can be claimed for the entire TDS. Which year would the credit be available? It is available in the corresponding year when the income is offered to tax in the state of residence. So depending on the countries that you are following, they may follow different financial year as well. So let's say in US you have a calendar year of taxation. In India you follow April 1 to March 31st, right? In such a case, the corresponding income which is offered to tax in India could be in a different financial year, and therefore the credit can be claimed accordingly. Can the relief be claimed on total foreign income? Generally, relief is to be claimed on an income to income basis. What this means is if you have income 1, which is taxable under Article 12, $100, something which is taxable under Article 21, another $100, you pay taxes of 30 here and you pay taxes of 20 here. So the total tax that you pay, let's say, is 50. Can you claim the set off of this entire 50 against the income tax payable in India? Or is it you need to see how much tax are payable on this income in India, how much taxes are payable on this income in India, and then restrict the tax credit accordingly? The answer to that is that the relief is available on an income to income basis, which means you are going to calculate how much taxes are to be paid in India on this income. So let's say on this income, the taxes which are payable in India is only $15. In that case, you will get a credit of $15 on this. The remaining 15 is a sunk cost. As against this, if on this 20 you have to pay $30 in India, then you pay an excess of $10 as taxes to the Indian government. Now, even though you would have wasted 15 here, still you cannot claim an offset of this against the excess tax payable on some other income in India. So the credit has to be claimed on a income to income basis. Which taxes are creditable? The ones which are covered by Article 2. In many treaties you may find a clause which may permit you to claim credit for others as well, but that is obviously on a case to case basis. Would state R give refund of taxes paid in the source state? This is one belief which I've come across where people say that, why don't we claim a credit for this? Why don't we claim a refund for this? Please note that logically, if someone gives you the money, I'm saying individually, if someone gives you the money, they cannot recover it from someone else, right? Same thing applies here. If you've paid the cash to the US government, why shouldn't the Indian government give you some refund for that tax, right? But some countries do allow you a carry forward of the unused foreign credit. So let's say in this case, if this $15 were not to be claimed as a credit against the taxes payable in India, you can carry it forward, and in the next year, if you have to pay some foreign taxes for same income, you may be allowed to set it off